3 SPAC stocks or special purpose acquisition companies for January 2021. These are 3 under-the-radar pre-merger SPACs that are still in their searching phase that I believe have great management teams. And at the time of this video, they are all trading below $11 per share. In full disclosure, I do have positions in all 3 of these blank check companies. We're gonna go over these 3 SPACs right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, the first SPAC we're gonna talk about is Senior Connect Acquisition Corp. On Fidelity, the ticker is SNRHU for the units, and the common stock and the warrants are not trading yet. SNRH is looking for a business combination in the senior market. In 2018, people over the age of 50 in the United States accounted for $8.3 trillion of GDP and approximately $2 trillion in healthcare spending, according to the AARP. Despite the buying power and economic impact of this segment of the population, there have been few products and services that have successfully addressed its unique needs and demands. Those that have done so have been limited in their scope and impact. It is this highly unmet need that will be the focus of their business strategy. With the US population aging at an accelerating rate, this opportunity will become even more pronounced, most particularly among those over the age of 65. A demographic that is projected to grow from approximately 48 million people in 2016 to over 88 million by 2055, according to the US Census Bureau. It is their intent to capitalize on this opportunity, focusing their efforts on acquiring and combining companies that are positioned or can be repositioned to better serve and excel in this large and growing market demographic. The senior market offers compelling growth trends, controls a disproportionate share of financial wealth, and presents significant opportunities and unmet needs in a broad range of areas, from lifestyle to healthcare, such as social determinants of health, social and lifestyle platforms, services that assist in reducing friction and avoidable costs and wastes in healthcare, lifestyle platforms that serve the healthy senior, and those that address end-of-life issues. So that summarizes the goal of SNRH. Now, let's take a look at the management team, which is the reason I'm super bullish on SNRH stock. I'm not gonna go over the entire management team, so if you're interested in learning more about them, be sure to read through the SNRH prospectus, which I'll leave a link to in the video description. First, we have Richard T. Burke. He is the CEO and chairman of Senior Connect Acquisition Corp. He was the founder of United Health Group. And yes, this is the United Health Group, UNH stock that has a market cap of over $340 billion. At United Healthcare, he was the former CEO and chairman until late 2017. And currently, he is the lead independent director of UNH. He is also the principal investor in and executive chairman of a senior-oriented business called Secure. He has many other notable leadership roles, which I'm not going to mention in this video, but my main point is that he obviously has a very deep knowledge and passion for healthcare and the senior market, in particular. Next, we have President and Director Isaac Yitz Applebaum. He is currently a special advisor to 8, a venture fund which invests in enterprise software and healthcare technologies. And 7Wire, a digital healthcare venture group that was one of the early investors in Livongo Health. He is co-founder and partner of Ms. Ma, a fund which invests in Israeli startup companies in the mobility, cloud, and digital healthcare space. He is a co-founder of Secure, where he has been a director since January 2019. He helped found and build SecureKey, a blockchain technologies company where he currently serves as a board observer, a position he has held since 2012. He also served as an early investor and director of mobile payments company CLII from 2013 to 2017, before it was acquired by Square Inc. And he was also a founder and the CEO at Concord from 1994 to 1999, when it was sold to Bank of America. So he's another manager with deep knowledge of the healthcare industry and also a deep knowledge of blockchain, which could lead to a very exciting business combination given the recent rise in Bitcoin. The next manager is CFO and Director Ryan Burke. He was partner and director at Blue Fire Capital, which was recently sold to Galaxy Digital Holdings. Blue Fire Capital was a proprietary trading firm and global liquidity provider specializing in cryptocurrencies. He's also the son of SNRH's CEO, Richard T. Burke. And next we have Executive Vice President of M&A, Stephen Schwartz. For the past 4 years, he was the Senior VP of Business and Corporate Development at Livongo, where he was responsible for the series acquisitions which culminated in Livongo's $18.5 billion merger with Teladoc. Other notable leadership roles he had was with Tivity Health, 23andMe, Allscripts, and LabCorp. The reason Livongo Health is so important is because it demonstrates the SPAC team's track record. Livongo IPO'd in 2019 at $28 per share, and just 1 year later in 2020, it was acquired by Teladoc for $18.5 billion, or $159 per share. That's more than a 400% return in 1 year. So I am very impressed with this blank check company's management team. Senior Connect Acquisition IPO'd in December of 2020, and they have 24 months to complete a business combination. I expect the warrants and the common stock to become available for trading around February 4th, which is 52 days after the SPAC IPO. If you decide to purchase the units like I did, make sure that you're aware of the reorganization fee that your broker charges to separate the SPAC units to the common stock and the warrants. I use Fidelity Investments, which currently does not charge this fee, but I've seen this fee as high as $38 on other brokerages. All right, so the next SPAC we're gonna talk about is DD3 Acquisition Corp 2. On Fidelity, the ticker is DDMXU for the units, and the common stock and the warrants are not yet trading. The SPAC is led by Dr. Werner and Mr. Combe. Their first blank check company, DD3 Acquisition 1, completed its business combination in March of 2020 with a company called Betterware de Mexico, ticker symbol BWMX. This business combination was a huge success, as BWMX is up over 200% in less than 1 year. Dr. Martin M. Werner is DDMX's chairman and CEO. He is on the board of directors of Betterware. He worked at Goldman Sachs for 16 years, from 2000 to 2016, becoming a managing director in 2000 and a partner in 2006. He was co-head of the investment banking division for Latin America and the country head of the Mexico office. So he is a very successful and accomplished business leader. The second manager, Chief Operation Officer and Director, Jorge Cum. He was a managing director in the investment banking division of Goldman Sachs in Mexico City from 2010 to 2017. While at Goldman Sachs, he covered companies across the Latin American region and led several business transactions in the Mexican and Latin American markets. So I am very impressed with these two managers and the rest of this blank check company's management team. DD3 Acquisition Corp 2 IPO'd in December of 2020, and they have 24 months to complete a business combination. I expect the common stock and the warrants to become available for trading around March 10th, which is 90 days after the SPAC IPO. The final SPAC we're going to talk about is Climate Change Crisis Real Impact 1 Acquisition Corporation. This SPAC, as its name implies, is targeting the green energy sector. On Fidelity Investments, the ticker symbol is CLII for the common stock and CLIIWS for the warrants. And they are currently trading separately from the units. CLII is led by CEO and director David W. Crane. He's a prominent energy industry executive, both in the traditional and the clean energy sectors, and a long-term climate advocate committed to leading the energy industry's transition to clean energy. He carries with him 13 years of aggregate experience as CEO of 3 publicly traded energy companies: International Power PLC, NRG Energy, and NRG Yield, which is now known as Clearway Energy. And he has over 30 years of experience in the energy sector. During his 12-year tenure as CEO of NRG, he led the company through its evolution to become one of the nation's largest utility-scale renewable companies with Clearway Energy, a top 4 home solar business with NRG Home Solar, and the nation's most extensive Level 3 electric vehicle charging network with EVgo. Next, we have Chief Financial Officer John A. Cavalier. He served in several executive roles at Credit Suisse. In 2005, while serving as global chairman of the Credit Suisse Energy Group, he founded the first investment banking effort dedicated to renewable energy. He was the lead advisor on the IPOs of several companies, including SunPower Corporation, SunTech Power Holdings, First Solar, REC Solar Holdings, and others. He has also served as financial advisor to and has conducted significant capital raises for leading renewable energy companies globally, and was the first recipient of the Bloomberg Finance Renewables Banker of the Year Award. Next, we have Chief Commercial Officer Elizabeth Comstock. During her 27 years at General Electric, she was responsible for initiating GE's clean energy and digital transformations. She formed GE Ventures and Licensing, which invested $330 million into new businesses, including Clean Energy Solutions, and she oversaw GE Current, a commercial smart energy business that included solar, and GE Lighting, a consumer business driving LED-led energy efficiency. She has been on the Fortune and Forbes list of the world's most powerful women. She also serves on the board of directors at Nike. As we all know, green energy, and in particular electric vehicle SPACs, are extremely hot right now. Here are some of the common stock and warrant prices of EV SPACs that I've previously talked about on my show. Assuming the green energy sector remains hot when CLII announces its target, I think we may see huge gains out of the common stock and the warrants. Climate Change Crisis Real Impact 1 IPO'd in September of 2020 and has 24 months to complete a business combination. CLII common stock closed on Friday at $10.83, and the warrants closed at $2.10. So those were my 3 pre-merger SPAC picks for January 2021. Let me know what you think about these 3 blank check companies and what other SPACs you're watching. And before you sign off, I wanted to let you know that M1 Finance is offering a $30 sign-up bonus for a limited time. If you sign up with my referral link, which is in the video description, both you and I will receive $30. Be sure to check out my M1 Finance full review video where I compare M1 with TD Ameritrade. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.